Hi, my name is Alan Noblitt. I'm the owner of Seascape Capital. We're a note buyer based in San Diego, California. Today we're going to talk about the benefits and risks of holding onto a mortgage note or selling it. First of all, what is a mortgage note, which is also called a deed of trust note or a real estate note? And we're also going to talk about note buyers. So a mortgage note is basically just a buyer's promise to pay for a property that you sold to them. It could be residential, it could be commercial, it could be land, or even a mobile home. The note is generally accompanied by a deed of trust or a mortgage, which basically serves as the collateral for the note. So if there's ever a default, you have basically a direction that you can go back and try to seize the property. So you have a choice as a note holder. You can either hold on to the note and collect all of those payments, or you can decide to sell all or some of the payments over to a note buyer. So as far as the benefits, you already know what some of the benefits are of holding onto a note. You're collecting those monthly payments. They're coming in at hopefully a reasonable interest rate, and hopefully they're coming on time if there aren't any issues. But there are certain risks of holding onto the mortgage note. The biggest, of course, is default, which means the payer stops paying. So there could be common causes of default like a divorce, job loss, illness, family death, even a natural disaster like a fire or a hurricane. So that's always a concern if you're holding onto a note. If you're a note holder, you also don't need to check on the property taxes to make sure those are always current. You want to make sure the fire insurance is always in force. And of course, you want to make sure the condition of the property is excellent as well. So when you sold the property, you sold it to somebody that you thought was worthy and that can make the payments. But what about in 5 or 10 years? Is this person or family going to be able to still make the payments? Are they still going to be employed in the same type of job as they are now? Do they still have the same type of income? Sometimes when people call me, they say, well, if they don't make the payments, I'm just going to go in and foreclose. But foreclosure is not like repossessing a car. It's in almost all states, it is time consuming, it's expensive, and it's very difficult to do. So it's not something where you can just go in and repossess it. So when you're selling a mortgage note, you'll want to talk to more than just one note buyer. You want to talk to 3 or 4 different note buyers to see who makes you the most comfortable and to see who's the most competent. You want to make sure you're talking to somebody that's a good listener and that can propose different solutions to you. So for instance, lots of times people call me and they've only considered selling their full note. They haven't even thought about, because they probably weren't aware, that they can sell just some of the payments and basically just get the money that they need instead of a lot more money than they really require. And you should also make sure that when you're talking to someone, you don't just offhand take the highest offer, because anyone can promise you a high offer, but it's what you actually receive at the end that is the most important. Thank you for watching. Again, this is Alan Noblitt of Seascape Capital. Even though we're based in California, we buy notes all across the country. We buy more notes in Texas than California, in fact. We've bought notes in almost all of the 50 states over our existence since 2002, and we would be happy to help you. So thank you once again.